Sorry, I don't know if you're still waiting on me, Shorty, but I'm ready whenever you are.
Excuse me, but that's not how it's going to work in trading. You have to apply it. You have to manage your emotions. Your psychology is more important than technical analysis that we're going to show here. Okay, so with that being said, so everyone in the group that signed up, you're going to have indicators available in TradingView. So if I already have mine loaded here, but I'll just pretend I don't, you will go on indicate. Can you guys see my screen well, Drew and anyone?
Yeah, you're good.
Sure
Yep.
I'm on my smaller screen too for this session, so
it looks better than the big screen. Yeah.
Yeah. So if you go under indicators, if you log into your account in TradingView, there's something called indicators in the top, and I'll just give you guys a rundown on TradingView if you're new. This is your time frames here. You can use anything, and you can also customize these as needed. If you want to add, 45 minutes or 65 minutes, you just press 65 here and click add. Same if you want to do like 75. There goes 75 minutes added now. I really don't need 75, so I'll just delete it. But I don't trade below 3 minutes. Usually it's 3 or 5 minutes. If it's, a really consolidating day, you do need some confirmation. I'll go to 5 minutes and then wait for the breaks on those candles. Anything below 1, 2, 3, you can play, but it better be a scalp, and you better know your exit entries, and you have to be super quick. These companies have bots and algos that are $1 billion worth, and you're not going to beat them in their own game. So if you're, trying to be the scalp master, sure, but those scalp masters take 10, 15, 7, 5%. The retail master, the scalpers, they want to scalp, but they want to make 200%. Scalping is about repeating 10, 5, 7% constantly and just compounding. So don't get that confused, please. If you go under indicators and you click on invite only scripts, you will have orb Shorty targets, and you'll have the orb screener. Once you load those up and you go here, so I'll just unhide mine. If you go there, and then the orb screener is up here. So now let it just load up. Where's sequence wise my orb screener? Maybe it won't load. Oh, it's still loading. We'll give it some time, but there goes the orb screener as well near the top right. So I'll start with the orbs, what they are, how you should use them, and then go to the screener and then give you some more insights. So the orbs, if you're not familiar with those, is basically your opening range. We play the opening range of 30 minutes, meaning you grab the 30-minute high, like in this case, it was here at 9:57. We created an orb high. That's your orb high, meaning when it opened within the first 30 minutes, this is the highest level. So the sentiment of the 30 minutes, the first 30 minutes is very important. Back in the day when there was no computers, there was pit traders, they would actually establish the sentiment with physical presence, whether it was the body language, whether it was the screaming or whatnot, but they were the ones that set the tone for the rest of the day. And people would feed off of that tone, just human psychology, and play it that way. Maybe here it looks very, very bullish, but actually ended up just being what kind of day, Drew?
God. It's the regular day where you go up and down.
Yeah.
Oh God, what's it called?
Can I say it?
Please do, thank you. Typical. Yeah, typical. I
Ended
know what
up
it is.
being
I
just
just don't. I haven't memorized the names yet. I will. Sorry.
That's okay. I'll just keep asking until you do. So the typical day here occurs when we open with a high balance, right? So there's a high balance in between. So the range would be 126 to about 133. It's a nice range. Usually when something like this happens, you can expect a no break to the orb high or the orb low. What that means is that there's a huge range the buyers and sellers have to play in, and that means they're happy. This is their happy range right now. Unless somebody breaks this box, then we have a different type of day. And Drew knows the name for that one. I am pretty certain he's aware of it, and I'll keep picking on him until he becomes expert.
It's the extended.
It would be the extended typical day. Extended typical days usually happen towards the end of the day, usually between 10:45 and 4 o'clock. When that happens, that means that this range, orb high and orb low, is going to be broken. Usually you will see a break. I usually say, I'm sorry, I grabbed the wrong ticker, the wrong level. Orb low, if it's broken here, right, and it continues, it doesn't come back to the inside of the range. That would be a nice extended typical day. So if I exploded here, and I usually want something, once it breaks the orb low, I really, really want it to hit 1618. Now that's usually the target where I will unload the contracts, and I believe that's exactly what happened Friday, if I remember, on SPX or SPY when we played it. So that would be here, still a typical day. They came back and a slight little fake out, and then they brought it back in. So the range of the orbs is basically your orb high, orb low, and from there we project these levels. Each one of these levels that you see can be used as a confluence point, meaning you count the line as a confluence point. In terms of confluence points, you want to have minimum 3 confluence points to take something long or short. So for instance, anyone, where would we have taken a trade here, considering the orbs are shown right here? I'm just picking on people to make sure it's kind of engaging session and people see the other people understand it as well. So where would be a good entry here? There's a couple of them.
Probably orb, like right after the break of the VWAP cloud to the downside, right before the orb 50.
Yep. So you can. So there's a couple of ways to play it, right? So you have the trend bar here, and if you're on ASHI candles, that's what I suggest you use till you get a little bit better. Me personally, this is just how Shorty trades a little bit more aggressive than others. You have the orb high rejection as 1, right? I usually like to take trades that are double tops, that are double bottoms. I missed the double bottom that Rayon called out the other day, but that was a nice one, and I'm glad that he noticed it, right? So here it's a double bottom on the double top on the orb high, and you can see the candles are getting smaller, a couple of wicks there. Usually this is a really, really good reward to risk to reward trade here. If you short here, then you just have to keep a loss, maybe 127 or even a little less, depending on what your stop losses rules or whatnot. But if you get in here and you short it, then boom, you have the trend bar as a confirmation 1, you have the VWAP as a second, and then your third one would be your one with the 50% orb right here. So even if you didn't short on the orb high, as you get more comfortable, you can still short it right here. So 130, 153, all the way down to, what did it go here first time, to 129.88, or if you're patient here, you went all the way down to 128. So about 3 points on Baba, which would have been really good. And Baba's been running lately. So to catch a short on something that's been recovering, it's a pretty good way to actually trade. Does everybody understand the confluence points? So you can use whether it's the orbs, whether it's the VWAP, whether it's a trend bar, and then you can also add, don't ever forget that you can use what you know already. If you know that this is making a higher low and it's having a double top, you can use this trend bar, this bottom trend line as a signal for 1 confluence point. So you have 1, 2, 3. So in this case, you would have gotten right here on the break of the VWAP.
And you also have good volume there. And then ultimately the safer play is the retest of the VWAP and the trend bar there.
Yep. So the retest usually, and you will hear a lot of people in this group, hopefully now that I've conditioned them a little bit better, is the retest pay more. So what usually happens here is the momentum traders, what are they called, Drew?
I don't know.
So if this was a really, really nice, let's say a really sell-off, these would be initiating sellers, right? They're the ones that are going to be aggressive selling below the value. So once you broke the VWAP, I'm not saying that's what happened in this case. This is just intraday chart. You will see initiative sellers come in and kind of go in heavy, right? So here they sold it right below it. They come back, and there's responsive sellers, because it's a typical day. They're coming in and just playing the waves, right? They're hitting the major resistances and they sell off. And that's exactly what happens here. And as long as you're below the trend bar, you stay in a trade. And that's where I need to improve as a group and as individuals, because a lot of you are so afraid to make money, lose money, that you're also missing out on money. And when that happens, that's actually really, you're working against yourself. You're not working against the market at that point. It's you not accepting the risk. And if you don't accept the risk and you don't know how to handle it, then you're not ready to make money. So the key is to understand the risk and absorb it, and know that every trade that you take, there's no guaranteed outcome. It's a risk that you're willing to take, but there's also a reward if you're correct. And once you start accepting that, the way I mentioned it, you'll become a much better trader. So here it was your risk that you take it. If you set up the risk above the trend bar, sure, that's 132.32. So if you're shorting, let's say from here on the retest, and you put your stop loss to be the trend bar, Now you gotta ask yourself, what kind of reward am I getting here? Like, is this risk reward 2.7 good? Yeah, that's a really good trade, guys. If you're gonna take this trade, our first target is always orb low. So if you're taking something from orb 50 short, your first target is orb low. If you're taking something long, let's say that we reversed here on Baba, your first target would be your orb high. And here, if I just click on this, 4-to-1 ratio on a trade is amazing. You can take that trade any time of day, even if you're wrong. Just get out here and you'll be a profitable trader. If you hit one of these, like all the way down 4-to-1, you're probably going to be more profitable than you think you would. And you're going to be a much more successful trader doing this than, you know, not having a stop loss. And like, look what happens if you increase the stop loss here. Now the trade's 1-to-1. You better be right. So hopefully this is making sense. If you're not familiar with the RR, the risk and the reward, you really need to get to it. And if you need, you know, help, try and figure out how it's calculated, how it works, just let me know. I'll help, or I can even cover it during the call today. But that's how we would trade between in a typical day, right? So in a typical day, if something's there, you know you're going to be rejecting orb highs and you're going to be getting support at orb lows. Responsive sellers will sell on the top. Responsive buyers come in on the bottom and they kind of bounce it or try to bounce it. In a typical day, you don't see a lot of bottom top plays. That's actually the 5th version of the market day, which is called trading range day. On a trading range day, you go between the orb low and the orb high consistently. There's happy buyers, happy sellers, and they basically just do this. And if you recognize that they're doing this, right, then you have opportunities to be patient and make some money on it, right? So what we experienced here on Baba, just a typical day, it wasn't really going up to the orb high again, just visited once and kind of made lower highs ever since. Any questions so far here? I just want to bring up something for you guys here on Discord here under trading 101. I did post the trend day, what is a double distribution day, what type of buyers we have, and there's a typical day. There's also a chart of typical day, extended typical day. I do suggest that you get familiar with that, because as soon as you can recognize the pattern that you're seeing of the day you're having, it's much easier to trade and know what you're going to be like trading wise, how to respond, how to be, where to be. If this was, let's say, a upper trending day, let's see if Tesla, I don't know who had a good day. And so a lot of stuff is in the same spot. Was anything running on Friday to the upside?
BA was.
Oh yeah, I forgot about BA. We traded BA. Yeah, you're right. Thank you. Okay, so BA was actually a couple of easy trades, a couple of I guess even if you want to call it lucky lottery plays that we took. But here's how we traded BA, and just kind of let me just take this indicator on the bottom. I don't use our side. So here's BA on. Go ahead.
I was just gonna say playing that bear flag would have been killer right there. I mean, you basically have trend bar, VWAP, everything.
This one here.
Yeah.
No, yeah. Oh, which bear flag are you talking about?
Actually, sorry, I just realized I'm dumb. Never mind. I take it back.
Yeah, I'm just looking. I'm like, I don't see a bear flag. Yeah. So this was basically, if you look at the chart, right? So we opened pretty low actually at what, 211. I've been pretty bullish on BA, just the way they've been set up, and they've been accumulating for some time. This stock pre-COVID was 360, 364, 446. So let's see. It was right here. It was 352. It was off by $6. So it had a nice range before. I mean, almost $500 stock. And here it comes. The typical day starts right here, and then you see them at what, like 11 o'clock. They're trying to break this to make it what?
Extended typical day.
Yeah, they're trying to make it extend a typical day. Usually in a trending day, what would happen is that you would literally go here, you would break the opening range high, and then you would just have mini bull flags and you would continue going up. You wouldn't really have a pullback all the way down to like almost or below and then continue higher. So in a typical an extended trading day, you break the initial balance high and low, meaning the orb high and orb low. And here you see that there was a double top similar to what we saw earlier in Baba, but then they came back and refreshed it to go higher. So we got in here on a couple of contracts, I believe. First, we got into contracts here on, I believe, 215s, and they ran for about 100%. Then we got in on the orb high. I think it was 9 cents. I don't recall. I think it was 8-9 cents on the contracts for 220s, and I think I sold it at $23. So it was a quick 100% just of kind of having fun and learning on BA. Drew, did you play? I think you played BA. Somebody played BA.
I did not play BA.
Yeah, somebody did. It was fun. It was my favorite 100% ever. It was like a Starbucks.
Oh, I'm trying to think of his name. Oh, I played. Oh yeah, I played those 220s from $9 to 24 or whatever it was.
Yeah, it was 150%, man.
Yeah. Sorry, when you said 9, I was thinking 900 to 2400. But no, I played it from 9 to 24 with you.
Yeah. And it was just understanding the simple concepts, right? It was understanding what they were having. The pressure was to break it, right? Because you can see even here, once they dipped it, they actually created like a little consolidation, the zone, which I suggest that you guys look at and start drawing, right? So here, if you see it, they're kind of consolidating and not letting go of this box, and this alone can be used as a confluence point. So here, if you think about it, you're above the trend bar, you broke the VWAP, and here you had a consolidation zone that you also broke out of, and then you broke the today's high as well. So if you're not trustworthy, to take the call on orb high, you don't trust it, yeah, that's fine. When it breaks the today's high with some volume, if you're looking and paying attention to the bottom, the volume was doing well actually, it was increasing, and then you could see the topping here coming, right? They hit the 1618 on the retest, went all the way to 2. You see that it's kind of the sellers are coming in here and they're taking control. And then on 3 minutes you get these little indicators that are systematic off the trend bar that's telling you, hey, you can potentially short here, long here. You can use these as your confluence points, but until you get a little bit more familiar with the price range, price action, and how it works, I would refrain from using them just so you can gain your own personality and understand how to trade the orbs. Any questions so far on the confluence points? Make sure that I have this on the left for people ask questions. No questions. So orbs are basically the 30-minute range. We get the targets to the upside, targets to the downside.
You do have a question, Shorty. Lebowski, what's the rationale behind not getting into orbs when it broke the orb low? I think he's talking about the chart you were looking at before, not BA.
Which one was it? Baba? Right. No, you can definitely get on the break of the orb low. Yeah, Lebowski. I was just gonna find a nicer example, but definitely you can get this. There's no reason you would not. Even let's say kind of move this. So my stop loss would be here, and the reason I picked that stop loss is the VIX on the top. There's 1, 2, 3, 4, 4 VIX right there on the top. And even if you took this trade actually would be 2.44 risk to reward. So there's no reason not to take this trade. If you play it this way and you keep these handy and have like nearby. So if you got in on the orb low, which would be this, it's actually 377, your risk to reward. So that's a hell of a trade. A lot of people are concerned that there's not enough range here to trade, but trust me, you will make money on between the break of orb low to the 127. You'll catch the spike in IV, and you want to play closer in the money, right? You don't want to play on Baba. If you're shorting it from 128.9, you're probably picking the next closest one. I don't know if it's $5 or $1 increments, but definitely here you could short it off of the orb low and go down to 127. And usually at 127 you take profits. If you have, let's say, one contract, you can take all your profits at 127 because you're going to be above 20%. in this group, we're not looking for bangers like 1,000%ers. Yeah, sure, if we find some squeeze plays, we'll alert it for swing alerts. But the goal is every day make 10, 20, 30, 40%. If something takes off, and let's say you have multiple contracts, you scale out at 127, then your next target becomes right here at 1618. And you see what type of reward are you going to be looking to get here. 8.6 would be insane. If you have more contracts, you take probably 75% of your contracts here, and you leave some runners. You let them go and see how far they can go. And when I was trading live on Friday, you guys saw me on SPX. We traded SPX. On this run here, we actually got, I believe we got in here on the orb 50, Drew, I don't know. I think we got in somewhere here on the short side, which was the orb 50, the trend bar, and the VWAP. So the perfect entry was, I think, somewhere around here. Yeah, it was around here when we shorted it. When we did take the short, the 46.50s went from being about like 350 if I remember, and we sold them all the way to 8 or something like that. I don't know, Drew, you're in it. I don't know what you paid, I don't recall, but I know they went all the way to $8. The 46.50 put. So we took some here. I took some off here or below. I took some off here, and then I let one runner go, and I sold them somewhere around here.
We got
and
in.
It was a nice.
We got in right around 230.
Okay, 230. Okay, well, my first one I got in here on the 46.50s in the morning. I was in the morning as well. 230. Where did you get it? Oh, this is. I was not here when you guys did that. I think you guys did. I think you guys shorted again, if I remember. Rayon shorted.
No,
Yeah,
our first
Hey,
contracts we
please.
bought, I'm pretty sure they were 230 a contract.
Yeah, it was something cheap, and I know they ran. I know Drew was up at one point. I think he sold them for like 4 or 5 or 4 something.
400.
You made 50,
Yeah.
$60, yeah, or whatever, yeah. So, but that was good. You know, it was a good trade. You had a confirmation of a trend bar, VWAP. We knew a previous level, psychological, 46.70, and I think we had this level from a day before. And then you had almost like 4 points here that you could have shorted. There's also pre-market here that you could have, I guess, open wick that you could have connected a couple of wicks here to create a trend line, bottom trend line, higher lows. If you did, I mean, that's just another confluence point that you would get. But this was a super easy trade. One of the members, Rayon, called out this right here as a double bottom. Actually, this was a double bottom and a nice entry here if you're going to go long, just based off of price action. If you got, at 46.75 and you took it all the way down up to 4,700, I'm pretty sure those 4,700s would have been a couple of 100% from this point, taking long. And you have your targets, right? Orb 50 is something usually that's going to reject in a typical trending day, just because it's the half of the typical trending day and it sets it up for a lower high. If this was a higher high here, this sets it up for a lower high. Here's another lower high, and you see here that they kind of attempted to break it, but they struggled towards the end of the day, and then another rejection. Okay, so every time it breaks your entry, if you have an entry point, your next orb is the first orb that you take some profit off. If you take it off of orb 50 to the upside, orb high is the first one. An orb high and orb low will always be more powerful than the previous target for rejection or support, just because it defines the type of a day it is. And those outside targets, the extensions on the fibs, they're not the actual balances in the morning. So that's why they will not be as powerful as orb high and orb low. So playing, retests on the orb low from the bottom side for rejections is also something that we play. And the same thing on the upper side. If something breaks orb high, you can wait for a retest to take along just to make sure that that level is going to get respected and moving forward. Okay. Let's see what else. We covered that. So, and then another trick that we do, if you get an orb, let's say orb high, and this is moving higher, it's going above 127, you move your stop loss, right? So if your stop loss was, let's say, orb high, and now this is playing above 127, you can move your stop loss to be the break of 127 just to ensure that you're keeping all the profits. And same to the downside if you're shorting. Does that make sense to everyone? Hopefully it does. I don't see a lot of questions. And if you guys on the voice as well, you can ask questions. Don't be afraid to ask questions. Okay. So the type of days that we have, I know I'm kind of throwing a lot at you right now, but once you pick up the knowledge and the reading here in trading 101, so you have a trend day, which is basically, if you think about it, an analogy, if you have something that's running, up, it basically does not make new lows. It is making, higher highs plus higher lows, which is your bullish trend, and it just keeps going. It basically creates mini flags, and it just keeps going on. UPST had a couple of nice trending days, a few days, well, now I can even say a couple of bearish trending days. And everybody experiences the same day, right? At some point. All of the days that we see, whether it's today, is going to be repeated at some point in the trading year. Exact same patterns, exact same range. It's going to be repeated a lot. And all of those days are somehow different, whether it's volume, whether it's, who's in, who's out in terms of buyers, sellers. But every day is unique, but the type of days repeat themselves. So that's something that you will find in the trading in the Discord on the trading 101. So a trending day, if something just keeps going and keeps breaking the making lower highs and lower lows, that's telling you it's a trending day. It's constantly going. So think about it as a sprinter that I wrote in the comments there. If he takes off, he's not really looking back. He just takes mini breaks and keeps going forward. Okay, takes breaks and keeps going forward. On a double trending, double, man, my voice is bad. Double trading day on the range, basically, you will have something. Let me show you guys here. On a double distribution day, that's the same word I was looking for. Distribution day here, you will have two distributions that will basically look like mini boxes on the top. You will have a box on the top, and they'll stay here. And usually, it's when you have news pending or whatnot, you will find that we're going to consolidate here for a little bit, and then you will find the balance on the bottom, finding the value area where they're going to kind of consolidate as well. And then they make a decision based on these ranges if they're going to go up or down. So if you think about this, there was a little bit of range from 930 to the top side on UPST here. And it did break the initial balances, right, of the orb low immediately in the morning. So that kind of tells you it's not a typical day. They're trying to consolidate it. So here's your consolidation on the double distribution day. So the first distribution happens on the top, and then you have consolidation on the bottom. And sure, you can take this long. On these type of days, you can take it on the break here, and you take it all the way. You have your orb 50 here, your VWAP is here. So if there's nothing in terms of orbs in between, then you definitely use your VWAP as targets to the upside and to the downside. So here, if you took the trade at, let's say 117, it passes your orb low here. That's a good rejection usually. About $3 move. That's probably going to pay on calls. And that's all you need to make. If you grabbed 120 calls here, you probably would have made a lot more than 10-20%. So this would be considered kind of like a double distribution day. I'm using 3 minutes. If I go on regular candles here, you see that there's consolidation a little bit from the open till 10 o'clock, and then they dump it, breaks the VWAP, breaks that range here. If I was to put that correctly, it breaks the range here. So you have 3 points here to short, right? So you have the consolidation, the VWAP, and the trend bar. So here, and then if you wanted to wait and have a little bit more confirmation, you see the drop below the orb 50 and it comes for a retest. That's where Drew was talking about that, he likes retest, and this would have been another entry that you could have taken right here. Just based on the rules that we have, you have 3 confluence points to go in any direction that you have. And here, trend bar, kept you in the trade here, rejected a couple of times, and usually, 127 is a good level to get out. You have the orb low here, and then you have the 127 as well. So if you have multiple contracts, scale out here, scale out, your runners right here, and you should be good. You should not have a green go to red in that case. And then you can take it to the upside based on knowing what type of day it's having. It consolidated here, broke down, value area buyers found, responsive buyers kind of coming back in. They take it back up, and then you see, the responsive sellers, they're saying, hey, your high value is now here. Let's sell you back based off the VWAP. And then you have a couple of trades you could have taken and just kept trading in the range here all day.
Looks like you have a good example of double distribution on JPM.
JPM. On Friday?
Yeah.
This would be more of extended typical day.
Okay.
This would be definitely, so it went all the way to orb high, went to the orb low, and then it basically broke the orb high. So this would be more of an extended typical day. It
My
broke
bad.
here, yeah.
Just trying to find a good example for you. And Friday, there's not much.
Yeah, and trust me, those days, they alternate. A typical day is called typical because it's typical. Extended typical it's because it extends the range, the initial balance high and the initial balance low, and it goes to make newer highs, right? And you see, even when it went there, every target got respected off of the orbs, right? So it came here, orb high, nice rejection, 127, and here comes a couple of times, the rejection of 1618. So the levels for you would actually work well if you took JPM trade off of orb high. And the only thing you can do is you can manage your entry and your risk. So if you're afraid to take a trade here, then, where are you not afraid to take a trade? If you took this orb high trade here, and let's say you find that there's a couple of X here on the bottom side, and you're like, okay, well, this is my stop loss here. If this is your stop loss, 166, you should be good here. I mean, you get in the orb high, and let's say you got it on this candle, it's still consolidating. This is your stop loss. You're still going. I mean, you would have made decent money on this run as well. So yeah, this would be extended typical day as well that we experienced on this chart. And I suggest, for people, if you're not waiting for the orbs in the morning, at least if you're going to trade, be scalping in the morning, wait for the first 5 minutes to settle. Don't go in like immediately at 9:30, unless you're, something or, seeing a great setup on the previous days. Wait for the IV to come down a little bit, right? So the highest IV is going to be right here, right at open, 9:30 to about 9:35. This is where, we get a sell-off and a bounce or whatever. That's where usually you're going to be paying a premium on the contracts for somebody else, right? They're going to be selling to you high. And then your IV, they're going to drop it here. It's going to be so against you. You're going to get out here only to see it go rip.
Okay, sorry, just to make sure I'm seeing this right. Delta is a double distribution day on Friday. DAL.
Oh, yes, I charted something on that. Let me just switch to 3 minutes.
Oh, no, I'm looking at the previous day. Never mind. I'm sorry.
Yeah,
I'm looking at the previous day like that's the open.
Yeah, this would be a previous day was a distribution, and it's also like a typical day as well. So here you could have played it off of the both of the ranges. You're correct. Like if you went here and you played it, you could have played it there, and then it has a nice consolidation here. You could have shorted it from there. Yeah. How often would you take a rejection of orb low to go long? I don't understand the question, but take a rejection of orb low to go long, like a support, like double bottom option. So if something goes down and goes up,
I mean, that's basically what SPX did.
This here,
Friday.
I don't know if he's talking about this. Are you talking about like getting in here? Your previous chart. What was my previous chart? JPM. This one right here. Yeah, I would definitely take this. If I was price action trading, yes, you can take this. It didn't really come all the way to the orb low to retest, but it's here. It's a double bottom, right? So if your first one is here, second one is here, right? So this would be your second double bottom. And then, you know, by the rules, you can play the double bottoms. If this is your first, second, then your entry would be here. If this is, if we can call this the neckline. I don't know, this is the neckline here. Let's say if this was your neckline here, and you can play the double bottom off your neckline. If you're a really, really risky person, you want to buy it on a double bottom, you can buy it on the orb low. The orb low will always have the best risk to reward for me. And here on this candle alone, I mean, I would call it almost bullish engulfing. It really did a nice job of breaking that candle and then continue higher. And then they came back and retested that candle to make sure it's real, and they continued higher. So if you miss the entry here, again, you know, you don't FOMO on this candle because it would trick you. You're waiting to see if it's going to come back, reclaim the orb low, the trend bar. And this is a nice kind of consolidation right here. That you see this little box. Once it broke this is your signal, because you had everything kind of collided there. Right? You had the VWAP, the trend bar, and the orb 50. And then, you know, if you're, you know, price action trading, you're connecting your lower highs. Here's your trade for the fourth confluence point. And the more confluence points you get, the easier it is to trade, right? So if I was to take this trade here, let's say on the break, there's no reason why my stop loss would not be here. You put it even, you know, at 165 even, but it's a lot more risk that you're giving. Even if you just put it here, you're going to make a nice chunk of money here on the long position. So let's see. So here's your first one. This would be 378. Your second one goes to about 5, and the third one goes here about 8.5. So this would be a very nice trade on JPM as well if you traded it. Okay, so today I will add the last 2 days in the market, and I already mentioned them to you guys, so hopefully somebody caught on to it. There's 2 days left. It's basically just a spread day, which means that it's a steady sideways day. They're basically really, really tight, not a lot of range. And you're not looking to trade on that day. That's the day where you can read a book about trading or something about trading, but you do not trade that day. Because most likely they're going to take your premium and they're going to just keep it. They're not going to give you any money back. And that's where you don't want to double down. You don't want to do anything to expose your capital. You're just playing defense at that point and conserving your capital. So that's the sideways day. And then that extended range day is basically when it's staying between the orb low and orb high, but it's going to the bottom and playing a full function. There's really active responsive buyers and sellers, and as it becomes to the high value, the responsive sellers sell it back. And it's basically like a rectangular consolidation in terms of the price action. So if you were to have, let's say, stayed in this range and kept hitting the bottom, if it rejected here and went down, it would have made it like a nice trade range day here. So it would have been a nice range day, and you would have been playing the orb high and the orb low. And you can buy, you know, the bottoms, the tops with the tight stop losses. So that's all the 6 days that we would have. I'll write those up right now, and you will actually have full 6 that you'll be able to reference. I do suggest that you take some notes of your own on it and kind of try to picture it. And the key is that you try to visualize it so that way you can recognize the days immediately. Right, so here it starts with a typical day, then it becomes an extended typical day on a break. And then you know, if there's buying pressure here, we can go long, and that's what you're looking. So basically, 4 breaks are your extended typical days or trending days on the retest of the key levels.
Make sure you memorize them for the quiz.
Yep. There's Dumpster Fire posting some good stuff there. Where did you find that Dumpster Fire? That's a really nice chart. Okay. Let's see what else. So we covered the opening range high. We covered up setting them up. I believe Drew had a class on volume profile and what it does. And if you haven't watched it, it would be good that you actually go ahead and watch that video. I'm not going to cover all of it now. I just don't want to give you too much where you're like blown up and your head's exploding from knowledge. But under indicators, there's something called session volume. That's usually what we use when we're using levels. And I believe Drew covered the epochs and the POCs. So I do suggest that you kind of look at it and try to figure out what we were talking about and what levels you're calling out. So like, for instance, you have a POC here, but this is a VPOC, right? So this level becomes like a really nice target for you to, pay attention to, whether it's going to break it or short it. Most likely there's going to be a shorting opportunity coming on JPM, maybe Monday.
I'll post the link to that video from yesterday.
Yep. So any questions from anyone? Does stock ride based on Qs and SPY? Like, can we take other stock trades, Qs, SPY, go down there? So Scuderis, usually you want to be in a trend of the market, right? If SPY is struggling and it's showing weakness, that's usually a good sign the majority of other stocks are going to be showing signs of weakness. And that's where we use ADD, advancing in the declining market breadth indicator. And I think a lot of people in this group are starting to picking it up and finding divergences, right? So if you look at ADD in here, right? ADD on 10 minutes was, it went all the way positive in the morning to about 1200, and then it just kind of kept making lower highs. So there was not a lot of buyers that are coming in, stepping in to advance the stocks from the previous day close. And then if you look at here, this is 10 minutes on ADD. If you go to SPY on 10 minutes, and it's also a green, right? So it started high. Where is this day? So it started here. So it started here, right? And then you see that it's making lower highs. Here it's almost, it came to equal that. But then, ADD also confirmed that it was a rejection and it worked out nice.
Shorty, what is bullish and bearish on ADD again? What levels?
I usually like to play it about 750. So 750 to the positive side, 750 to the negative. When it's in between 0 and 500, that's usually like a range chop day. So if you go in here, like right between 1150 and whatever, 1230, you'll see that, even here, it's not making really any significant moves, right? So 1150 here, and just in a tight range here on the ADD. So that's how I play that as well. How much cash would you recommend at minimum to get into orbs on a daily basis? How much cash would I mean, it's really up to you, Lebowski. I mean, you should, from the position sizing, you should not put more than 20% in any trade. So it's really what you can handle and what you can do within your own account, as long as you're managing correct risk management on those contracts. On BA, before the uptrend,
I'll say having like at least 5K, it just makes it so much easier to not run out of buying power and have more wiggling room.
Personally, I think 1,000 isn't a bad starting point. Obviously, CR said you want more, but I think 1,000 is still like doable.
Yeah, I think 1,000 is doable. You can start from there. Whatever you can afford, as long as you know that it's your money and that you got to manage the risk for your money, right? So that's the key. On BA, before the upbreak, we went through the trend bar view outfit. Why weren't you looking to short then? Right here, yeah, I probably would have shorted it, but knowing that there's a consolidation here twice is what I was indicating, Killer B. I'm watching for the range here that got set up after, right? It hit the orb high here, then it came back and it had a wick here, had a wick here. I would have shorted it here, yes, but it would probably be a bad trade. Because if I shorted it here, I would have wanted it to be to the orb low and probably would have been a nice trap for me to lose money on. So, and knowing what's going on in the market, BA had killer news, actually. They got a contract for $1.6 billion, right, from the Navy. So knowing that there's a catalyst in the back is also very, very good to not go too much against it and look for any upsides, right? Just fundamentally knowing the news and kind of listening and hearing is also important. So here actually created inverse head and shoulders for the 3 minutes, right? So you had a nice left shoulder here. Here comes the drop to your head, and here's your little shoulder pullback. And then, once you broke that, I continue higher there. So that's why I like these consolidation boxes zones. They usually pay well. And if you're not familiar with these ranges, so usually when something is ranging, let's say here, 0.86, that's usually your next target where you can take profit off. If you're not familiar with, like, let's say orbs, you don't trust it, this is usually a range where it's going to reject. So if I was to draw that line right here, so usually that's your first target where you want to take your profits. And, we know the 127 was nice here. It's very close to your 1618. So this is usually a good sign, get out, right? Because this is where it's going to go. The measure of the consolidation to the measure top is usually where it's going to reject. And that's exactly what it did here. Let's see, any other questions from anyone? Hopefully the explanation of the orbs, moving the stop losses, understanding the confluence points, you can still use your trend lines, your triangles, or whatever you might have been using till now. And I think this is exactly what we did on BA. We played to the upside. I actually stayed in, and I got on this hammer here. On the break here, I got in here. I think I got out here. Then I got back in somewhere around here, and then also the orb high for the 100%. For Adam, you mentioned again the ranges you prefer using. So I like stuff that's trending. If it's if you're gonna take something higher on a trend on a trending day, 750 plus, negative 750 below is usually is gonna get a little nice on the upper side and a little ugly on the downside, right? But if it's something is in between the range and opens really in the middle on ad, if something's below between 500 green and 500 red, you probably want to watch for the chop and know that it's going to be a typical day, and then you have to be quick on your profits. So 750 upper, 750 lower for a nice up, trending days, and then in between 500 positive, negative, you want to be watching, for a lot of motion range trading, and it becomes really, really tight to make money. So those are your sideways days, and you want to avoid that. Okay. All right, guys. Well, thank you guys for joining out. If you guys have any other questions, I'll be around here to help you. But other than that, yes, we'll do the watch list sometimes tonight. I'll hop on and I'll build the watch list out. Whoever can make it, great. If not, we'll post the watch list levels and put a plan together out. For does the market lead ticker lead the market?
I've always wondered that too.
So, so it's a tricky question, right? Is the chicken or the egg? So if the market's made up of 2,000 stocks and those 2,000 stocks are declining, the market breadth at that time is also declining because it's driven by the stock movement of those 2,000 companies. And I can't answer any better than that. So if the stocks are going to go down, the market breadth is also just telling you how many stocks are advancing or declining. It's not a leading indicator to tell you. I mean, they're all lagging indicators, but it's telling you the state of the market. If the ad is positive 2,000, let's say, and you see the stocks in S&P 500, one stock that you're watching dipped, I mean, that's a great buying opportunity because it's probably going to bounce back intraday at some point. Because the broader market might bring it up unless it had news like Peloton or whatnot that, something brutal. Okay. And then, if you have questions during the day, trading wise, the group's pretty helpful. I mean, there's a couple of mods, a couple of analysts as well. Please ask them, to make sure that you're even if you're not trading the first couple of days, I do suggest you just kind of ask questions and see where you would have taken the trade, if this would have worked, wouldn't have worked, what could you do differently? Because if you have another trading strategy that's been working, then this is just complement to your trading strategy. If you don't have a defined strategy, you don't know how to define your risks, you don't know how to define your targets, well, then this strategy helps you with that because the levels are defined. You become like a little bit of a robot of orbs, right? Because you learn how to trade them, but then they work in your favor. You just play the levels and you become a machine. You don't have emotions. Your P&L does not impact you. You're learning how to trade. Money is not the first thing that you should be worried about. It's the process and where you take the trades.
Check my DM before you take off, Shorty. I mean, not like, or before you step away from your computer, I should say.
Yep. Let's see. You mentioned ST, something about indicators see around the tower area. I just want to make sure. Does our current sub, I'm not, yeah. Yeah, you get these indicators, right? If you sign up for the 39 package, right? So you do get the TV indicators. You get the orbs, you get the pivots, the VWAP, the trend bar, and the orb screener is available to you in TradingView. Okay. Any other questions from anyone? No, there's new people. Don't be afraid to ask questions, please. I do want you to ask questions. I don't want you to fall behind where you're like, man, this is not working out, but you do not understand something. So. Hi guys. Well, thank you. Thank you for joining. And then tonight, just gonna work around my schedule with the baby. Once they fall asleep, I'll hop on. I can do it live or whatnot. But we're gonna go through the watch list and put the watch list together. I want to see how the futures open at 6 p.m. just to kind of get an idea a little bit, and then we can go from there.
Shorty, I have one quick question before you go, if you have a sec.
Yeah, definitely, man.
Last week, 4 out of 5 days, I was green. Thursday, I completely killed myself because it was just such a sideways day. I feel like I should have just waited longer in the morning to get into the market to see more of orb tests and stuff like that. Any other suggestions?
So the first suggestion is to understand what type of day we were having. So Thursday, was that the 6th? Yeah, that was the 6th. So let me just go on SPY for a second. Where's Thursday? So here's the 6th. Here's the open. So I mean, honestly, it's a nice, just typical day, right? So the bottom here broke. You had a little bit of consolidation here. If you look at it, you have to know what kind of day you're having, and I don't know what kind of trades you took. But if you're green for 3 days, right? And you're forcing the 4th day to be green, or you're not seeing a clear direction, that there's no reason to trade. It's better not to trade than be 3 for 4. This way you would have been 3 for 3 and 1 day void, meaning just a learning day. It doesn't mean that you're going to constantly trade. If it's a tight range, like right here, if you took any trades like between this time right here, I mean even the rest of the day here, so all the way to, what is this, 4 o'clock right here. I mean, this is crap. This is a crap range to play in. And that's probably where you got stuck, and the theta probably ate you alive both ways. Whether you're like, okay, I'm going to go short, go long, it was not enough to recover. So you just have to understand, look at the day and see, hey, if you break this range here, you probably could have scalped some nice calls here, and then it went back inside. You have to be really, really good on these, recognizing the days and what's going on.
Okay, got it. Thanks. Yeah, that's exactly what I did. I got in kind of where you started that, and I just got stuck in that range all day.
Yeah, you just have to watch it, right? Let it develop, and let the plays develop, right? If you're just getting in for the sake of getting in, I mean, the first rule you want to wait for is, let me see how it responds to orb high, and then if you see that it's going to the orb low or breaking here, right? This would have been orb low here, I believe. This was right here. This is your orb low for that day, 466.87. So here you had a nice break, right? It broke the 466.87 and went down all the way to 465. So that would have been a nice trade. Then on a rebreak, on a reclaim of the orb low, which was like right here, and it reclaimed it perfectly, you had a nice little flag that it's trying to make right here to take out its lower high, which was at 467. That would have been a nice trade. Then you get out, and I mean, at this point, you would have been, 1-for-1 on this trade if you took a long here, or if you took a short both ways, you're 2-for-2. There's no reason to force another trade. Usually the trading hours, between 11:30 and like 2:30, 3 o'clock, there's nothing going on, especially the beginning of the year. People are not back fully yet in terms of algos and hedge funds trading. They're waiting to see what's going to happen with the CPI. Knowing these factors, right? 2 trades per day, or even 1 trade per day, is good enough. And there's a couple of people that that you get greedy mentally. Oh man, I had a really good day. Past 3 days, I need another one. If you made a decent goal for the week, there's no reason to give any of it back, because then your account stays flat. Because you gained here and you lost here. You gained here, you lost here. Instead, you took 3 days. Okay, you see that you took 2 trades. Let's say here. I mean, that's good. Just step away from a computer, and your account's growing.
Oh, I want to piggyback on what Shorty's saying really quickly. Just slow down and step back. Like, make sure you draw those consolidation areas on your charts as they're happening throughout the day. In this instance on SPY, draw that bull flag, play the break of it. Like, that's really the one good trade of the day, is that little bull flag. Possibly the break of that consolidation zone around, what is it, like 12:45-ish?
Yep.
And that's it. That's all you have. That wick at like 11:30, like, that's not even playable. If you go back a tiny bit, Shorty, that wick right there, yeah, like, that's not playable breaking out of that consolidation zone. So if you slow down, and I mean, like, it's really hard to put it into words, but if you just slow down and step back and don't try to force trades and draw your consolidation zones on your charts, look for patterns, and just try to play the break of those patterns. If it's not in a consolidation zone, like, that's where you'll find the good plays. Don't try to force things. Don't try to get 5 or 6 trades in a day. 1 or 2 is enough, even 3.
Yep.
And just take your time, step back, and just look at everything. Look at the big picture. Make sure you check your volume as well. Make sure you're looking at ads. Make sure you're looking at VIX. Look at the whole picture before you jump in that trade, and really just step back and take your time, and don't FOMO.
Yep.
Yeah, that's great advice, guys. Thank you. Yeah, what I did was I took that first SPY trade, Shorty, that you're talking about, made a profit, and then I was watching Amazon at the same time, and it started to really drop, and I tried to like front run it right at 10. I thought it was just going to break the orb, keep going, and I took it right there, came back up, and then it just literally based for the entire day.
Yep. And trust me, on Fridays, it's the most. It's the day where they make the most money and basically they make a lot of 100%ers, right? Because the contracts are going to expire, and if you don't, obviously go in the money on those or above it, they don't have to cover. So what they like to do is, hey, you're going to buy the 468 calls. Well, we're not going to close about 468 because your contract is going to go to 0. So you bought it for 30 cents here. They're like, okay, well, thank you for the $30. We're just going to go down. We're not going to close. We're going to close right about 466, and some people are going to have to cover on shorting side. So you have to think about market makers and how they make money as well, right? So if they run a state in a range, how many people would have played iron condors here on Friday? Probably 0 people in our group. To set up let me go play this setup here, and I know it's not going to go below. Probably not many people buy calls or puts and primarily play it one way, especially if you look at FinTwit like Twitter. They're all bulls. Like, they barely consider sometimes on how the bear flags work or the overall picture. They just want shit to run forever. You just have to, like Drew mentioned, right, or catching rockets. You want to make sure that you're paying attention and just waiting. And I think here is actually when I was going to the doctor's on Friday with my kiddo, I told you guys that there was a double top, and I actually got into the puts here. And I think I sold contracts for about quick $100 before I left, and those contracts went to be, I think, a little bit more think we got them at something 2.5, sold at 3.7. I think they went to like 4.4 here. And if you didn't sell, then I don't know why you wouldn't, but here you had a nice range that was kind of giving you a consolidation. You knew that something comes back to the top side, it's going to bounce, and it did it a few times. Once, two, and tried here, three, but it failed. So knowing the levels, right, and the type of day you're having is crucial, and that's why I wrote those up for you guys to get familiar. Here you have a nice bounce off of orb low, double bottom, take it long here, or if you want to take it off of the double bottom, really risky, you could take that. You have a zone here. I mean, multiple ways. As long as you step back and you let it develop, it's going to tell you what you need to do. And just in the morning, ask yourself what kind of day it is and what am I going to be, a responsive buyer or responsive seller? If you're a responsive seller, this is a high value area at this point, and you're going to be basically shorting here. Just because you're shorting the value areas and let the buyers show up and responsive buyers and drive it back up, down, up, down. And I mean, as long as you know who you are and where you're buying, you will do fine. Once you start taking trades because you think something is going to happen, then that's where you get in a little bit of trouble. Is gambling and not just because somebody on Twitter posted that let's say, I don't know, NVIDIA looks good and you got in because NVIDIA looked good to somebody. That's not what you're going to learn, right? That's not what I'm preaching. You wait for the setups to come to you and you take those setups.
Understood. Thank you. And the Thursday example, I said when I got out of SPY and I went to Amazon, how would you have played Amazon at that like 10 o'clock level when it looked like it was just bombing?
So let me see Amazon. So this level right here. Why do my indicators go away? I don't have a single indicator. So this right here, is that orb low?
No, on Friday. I'm sorry, Thursday.
Oh, Thursday. Oh, yeah, Thursday was, so you had a zone here, right? So you had a consolidation here. You see a couple of candles giving you a range here. This is usually what I would have, kind of watched, the 32.50 as well. So did you short or go long? What were you doing?
I shorted right at 32.50 on that big drop, and then I got caught in those 4 candles down there, and then it based back up, and it just based the entire day and drained all the premiums.
But where'd you get in though?
On that last blue candle down.
On this one right here?
Yep.
Yeah. So I don't know what levels were, but that just from price action, your entry should have been, let me see, and I'm not trying to tell you did something really bad or good, but your entry is the break of this wick here. So this candle here should have been your entry. If you caught this full candle here, you would have made some money on Amazon. So if you would have gotten in at 32.52, this went to 32.41, you would have made a decent, more than 10% on that drop, depending on what contracts you played on this candle. Would you agree? So your wick here was telling you kind of the hammer here, the pin bar. If it went to the upside and broke this pin bar, there's a strong chance you're going to go higher. Here you had a confirmation once it set that range. And let's say you didn't take your stop loss here, then that's on you because you saw that it's curling and setting up a nice range for a bounce. And here it went up, came back, and then continued higher. And then, look at this. That's why I said the systematic indicators only work in a trending. They look what happens here. Go long, go short, go long. This is literally the worst thing you can get in is this. There's nothing to trade here. It's difficult to trade this.
Yeah, that one trade basically made me flat for the entire week.
Yeah, so honestly, you just have to, in the hindsight, right? Like when I'm talking, you're like, yeah, damn, this makes sense. And it's like, how do you trade this live? Well, simple, right? So you pay attention to the candles that you're seeing, right? So here's making in the morning, right? So 9:30, it's making, lower highs and making higher lows. It's just a simple triangle. Here would have done the trick for you on Amazon to short it right here below this level. 32.72 short, and from our previous watch list, we had 32.70 on Amazon to be shorting level. So if you play that right here, then you could have been driving it, right? So if you don't know where to take your money, you just grab this triangle and look what it did. I grabbed the triangle high, low to the high, and look, it hit the 127 perfectly here, and then it broke it. And I mean, to me, this is perfect for 1618. I'll get out at 1618. So I mean, you get in here usually on this candle 3270 to 3247. You would have made enough money here if you were patient, not to take any other trades on Amazon.
You're also on the break of that triangle. You're below the VWAP, and you're
Yeah,
below
I mean,
trend
there's
bar.
a lot of confluence points here. And
Yep.
I mean, this one is a 948, so it's before the orbs. So this is your entry here, this candle low here. And I'm pretty sure we had 3270 on our watch list, if I recall.
Shorty, when you draw those triangles, is there any rule of thumb of where a 3-minute, 5-minute?
I usually trade intraday on 3 minutes. And here, if you're looking at my screen, we said on 1/6, Amazon below 3271, important level. So here, I mean, it broke that level on Thursday, and I mean, we charted it, it went and dipped. So you had a nice drop, 70 to what, 50, so about $20 drop. These would have printed, and actually I remember these doing well. Okay.
Awesome. Thank you so much. This was super helpful.
No, I'm glad it was. And you guys are asking good questions, so which kind of makes it encouraging to others to speak up, ask questions.
Sorry,
You're not going
Mula.
to learn sitting back in the class.
Is what candle a inside bar?
This one here.
The one after that white one is an inside bar. So with inside the triangle, the white candle, like that one right there, that's an inside bar. The blue one is an inside bar. The one after that as well.
Yep.
But I don't know exactly which one you're talking about. But yeah, I mean, you could play, you can play the break of those inside bars, but the safer entry is going to be where Shorty showed it, the break of that, the low of that candle on the triangle.
Yep. I mean, that's how I would have played it, but that's just the way I play, right? Doesn't mean you abandon your strategy at all.
So with that triangle you drew, you take the low of anything inside that triangle is the entry point?
Yep. I mean, I would take the wick, right, wherever that was earlier. I don't even know what day I'm on. Sorry. Oh, right here. I lost myself at the scale. So yeah, I mean, this was, so to get the fibs, right, and you see what the closest kind of rejection previously, right? I'm seeing here a little bit of a bearish hammer creating, and the bulls came back and they said no. So, okay, well, if you said no, let me find the next kind of, the wick where you're going to be potentially bouncing, right? But if this was the level where you're potentially going to bounce, I'm going to wait for you to break that level. And I mean, you don't get a better break than this one here. I mean, with the full body candle like this on Amazon, this move alone is probably 30%.
And why would it be that blue one versus like that second white one or the first white one in the triangle?
As your break, I would grab this one here, right? Because I want to catch most of the move, right? It's below the, it's below the VWAP and it's below the trend bar. And at this point, I don't think you have the orbs. But for me, this would be the entry. If you want it to be more risk averse, yeah, this is your entry as well. Just make sure that you have proper targets on the downside. Yep.
Got it.
It just depends on your risk level. If you're higher risk, you could take the trade when it breaks the triangle right there where the VWAP is.
Yeah, definitely.
But you're taking more risk on there. Like Shorty's saying, where you rejected before, when you break through that level, you're lowering your risk taking the trade there.
It's a little bit more probable setup in terms of probabilities. The only thing that we control is where you enter and where you exit, right? So for me, if my probability setup is higher here on the break of this, then there's no reason why I won't wait there. So if I got in here and my stop loss, let's say, was this triangle break right here, or I could even make it this triangle right here. And let's say my first target is 127, which for me, it's 100% first target. I mean, that's a 2-to-1 trade, right? That's actually really, really important that you have that, right? So this is good, right? If you can get this every day, it's good. My second target's usually here, and this would make it about 3.0, I believe, trade. Let's see, 358. So this kind of defines my levels, and I'm good. I got in here, my first level here, second get out, and that's it, close the day. You don't need a lot of trades. You need good quality setup and trades that come to you. And honestly, for for the way we trade, watch lists are good, but also just having charts up and looking for these setups and quickly recognizing is also very important. We can predefine the levels that are important, and then you play everything in between, including those levels.
Perfect. This was super helpful again. Thank you so much, Shorty.
Yep, no problem. That's why I'm here. That is a good indicator. Sadate, what indicator is that? Just so we can post it for people.
I can post one.
On TradingView?
Yeah, I have. Yeah, I have the Golden Wars. I'll post the link for it right now. Give me just.
Is it free
one.
or?
Yes, it's free.
Trading Wars.
Or I should say, he's posted it for free, but I know he also gives it away on his Discord. But so he has posted it for free before. So let me just find it really quick.
Yeah, I don't see it. TV Golden Indicator. TW Golden. If not, we can get somebody to write us an indicator.
No, I got it. I'm telling. He posted it for free on Twitter before. So.
I see it here.
It's TW Golden Indicators.
There you go.
Let me just see if I can add it here. Okay, well, I think it's not cached. There you go. I guess this is, he uses Bollinger Bands. So I don't like Bollinger Bands, but some people do.
Can someone share that indicator in the chat so we can copy it?
Yeah.
I already shared it.
Yeah.
Thank you.
We'll post it somewhere in Trading 0101 or no, I'll post it on TV Resources. Okay, I posted it just now. But yeah, I guess that's what they're talking about. I mean, you can definitely trade this. If you add this, and that's pretty much what I'm doing, right? If you look at it without the indicators, just that my eye can recognize it, just as quickly as this code, where I can tell where the insides are, and you play the breaks of those, right? And that's important. So once you combine this knowledge with what we got here, I think it becomes really, really powerful.
Yeah, you want to just start to learn to recognize inside bars and outside bars on your own. It's
I call them the master candles. Like for instance here, what day is this? At 2 o'clock, this becomes a really, really big master candle. Usually, you can get in below here on the retest on the short side, and look how beautiful that would have worked. So this is a nice master candle in 3 minutes, and literally never been able to break it, even if you go now 5 minutes. Where was it? Is it this one now? Yeah, so it's here, and look, never been able to break it here. So I call them master candle retests, and you can play the same way, or IBOBs, whatever you guys call them. Okay. What else we got? I think it was a good class. Thank you guys for jumping on. Hopefully you guys picked up some knowledge, and then I'll try to trade live. I can't promise tomorrow, but we'll see if we can get a couple of days in this week and see if we can see what the market does. I know there's a couple of economic events coming up on actually, I think Wednesday, or let me see here. So Monday we have PMI coming out, and then construction spending. Tuesday, hold on, this is the wrong week. Monday, so let's say inventories. Tuesday, this. So the CPI is Wednesday. Is there? Yeah. So this is gonna be Well, I think there's JP speaking as well, or his confirmation with the Senate's also either Monday or Tuesday. I'll find out. So a couple of events to watch here as well. See what's going to happen. I do know that we're going to get a little bounce at some point here soon. All right, guys. Well, thank you for joining, and hopefully the class was good. If not, if you're not able to catch it completely, you have to step away. Catching Rocket's been recording all of these, and he'll post a link once he's got it. All right, guys. Thank you. Have a good day.